Your Bank of America economists say no rate hikes this year and no recession. Is that still the case after Friday's jobs report?
Yeah, it's still the case. And that's a less growth than they would have had 6-9 months ago, and reflects the impact of the tariff war and the trade and all that. But they still think we continues to grow. And we're growing at a slow rate, say 1.5% this year, a little more next year, and a little more the year after that. But it'll take inflation for the Fed to get inflation out of the system really through the end of 26 into 27 down to the 2% level. And that's why they have the Fed holding. What they believe is sort of in the middle of next year, the Fed will start cutting and bring the Fed funds rate closer to what would be a more normal rate around 3%, 3.5%.
So even though we saw this really kind of astounding dissent by two members of the Fed saying we do need to move on interest rates, your prediction from your economists is that that's not appropriate at this time.
They don't think they're going to move. Now, the market says they're going to move in September, maybe twice this year. The market was at 7 times 1 point this year. Now they're down to 2. Then they're down to 1. Now they're up to 2. This is going to move around. But the reality is two things people should really keep in focus. One is until the inflation's out of the system, the Fed's going to be very careful, and that's what they said. And then secondly, the rate we're going to go to is a rate that is more normal than pre-global financial crisis, more of a 3%, 3.5% rate, which actually means the American economy is probably functioning better, frankly.